Mindsetters, hello, hello, hello. Welcome to your accounting lesson on a Thursday. I'm Luni and that is Ashraf.
Hi, how are you?
I'm good. How are you,
And
Ashraf?
where have you been all this time?
I've been around. I've
Okay,
been
good.
here.
Okay, good.
You're the one who's not around.
Is it?
Yes.
Okay, all right, all right.
So what are we doing for the Mindsetters today?
Today we're looking at the income statement. So basically what we're saying is, once you look at the income statement and you master it, it's a question that you can definitely score marks on.
All right, Mindsetters, I hope you guys are ready. We are doing the income statement. I'll be learning with you guys as well because I was telling Ashraf before the show started, I never did accounting till matric. So we'll be learning a thing or two together. Please make sure you send us your questions on Facebook, facebook.com/learnextra, or on Twitter @learnextra. And if you want to download show notes, videos, or you want to check out the schedule and what topics we'll be going through and get the notes and the videos, all you need to do is go to learn.mindset.co.za, and our website is revamped, so it's quite funky and looking cool and all nice, and it's quite user friendly, guys. So all you need to do is click on Learn Extra. You'll see there's Learn Extra Lab, Learn Extra Lessons, Learn Extra Revision. If you want past papers, everything is on our website. Check it out and you'll get all the help you need. And remember, if you want to win yourself this awesome Cassia calculator, all you need to do is enter the Test Yourself competition. And remember, entries close tomorrow at 12 in the afternoon. Ashraf.
Over to me.
Yes.
Thank you. Okay, guys, when it comes to the income statement, remember what are we saying? We are saying that we're going to focus on the income statement, but you see something different here. You see something different. You see here, statement of comprehensive income. Now, don't panic. Chill. The statement of comprehensive income is just another name. In fact, it's the new name for the income statement. So get au fait with it, because you may get to be asked to draw up a statement of comprehensive income, so you know exactly what they're talking about. They're talking about the income statement. Right. So therefore, we go to our challenge question. And the challenge question says, which expense that is incurred by the company will not appear in the income statement? All right? So that's your challenge question. Figure it out, and definitely at the end of the show, we'll be working through that challenge question. Okay, moving on to our lesson. Now, obviously, what is important for you to remember is that when you are working with financial statements, you work with a certain procedure. And when dealing with that procedure, we can summarize this as follows. Number one, you work from a pre-adjustment trial balance. Obviously, that is drawn up from your ledger. So it's not thumb-suck figures, but rather information or transactions that have transpired through the accounting period, that have taken place, and as a result of that, they now appear in your pre-adjustment, before adjustment trial balance. Okay. You then do your journal entries for your year-end adjustments. These are recorded and definitely then posted to your general ledger. Thereafter, you get a post-adjustment trial balance. And a trial balance after you have completed your adjustments, right? That's the following step. Now look at the procedure. You as a learner should know you're working from the pre-adjustment, you've done your adjustments, you've completed your post-adjustment trial balance. Then you get your closing transfers, your closing entries, right? That means you close off your nominal accounts and you transfer them to your final accounts. This procedure is important. And then you get a post-closing trial balance at the end. Once you have completed closing your nominal accounts, transfer them to the final accounts, you now have a post-closing trial balance. Remember, in this trial balance, you're only getting assets, liabilities, and equity accounts. That's right. Keep that in mind. And yes, The post-closing trial balance would then be used to draw up your balance sheet or your statement of financial position. Again, you're hearing different terminology, right? So watch out for our lessons when we will be dealing with the balance sheet. And for this particular lesson, like we said, the focus is the statement of comprehensive income. Right? We sound fancy, don't we? New terminology.
Yes.
Right, so we sound like we know what we're doing.
Yes.
Okay, right. Now let's look at this statement, the income statement. I've got a format here for you, just to make you understand that you always start off with your sales, and critical accounting boffins out there is the use of brackets whenever you are calculating something. And you know that nobody is going to tell you this, but the moment you are working with sales, you immediately subtract your debtors' allowances from your sales. This adjustment is not told to you. It is something that has to happen automatically. The moment you identify this particular amount, debtors' allowances, under your nominal section of your trial balance, immediately you must realize that now I have to subtract my debtors' allowances from my sales figure. Okay, another very important bit of information that you have to take cognizance of whenever you are dealing with financial statements. When you look at your trial balance and in your balance sheet account section, if you find any of the big five, what am I referring to here? Come, you accounting guys out there. When I talk about the big five in accounting, I'm not talking about the lion, etc., or the buffalo for that matter. I'm referring to the 5 accounts that are subjected to reversals. For example, accrued income, accrued expenses, income received in advance, prepaid expenses, and consumable stores on hand. So, if you see, for example, accrued income under your balance sheet account section of your pre-adjustment trial balance, it means that this particular item has not been subjected to a reversal. Okay, let me draw your attention to this very important feature. So if any of these 5 items appear, another one, consumable stores on hand. Okay, I've just listed 2 of them. Remember, there are 5 of them. If any of these items appear under your pre-adjustment trial balance in the balance sheet account sections, be careful. This means that that particular item has not been reversed, and therefore it's important for you to first do the reversal and then do the adjustment. Okay, so keep that in mind. Coming back to my income statement now. So I have my sales less my cost of sales, which will then give me, obviously, the cost of sales may or may not be subjected to an adjustment, depending entirely on the question. Right? You'll see when we get into a question how we work with the cost of sales figure. That would then give me my gross profit. Now you can clearly see that you are subtracting, and the use of the bracket is indicating to you that you are subtracting that amount from your sales figure. So that's my gross profit. Now, what do I add? I add other operating income. Like what? Like examples of operating income would be rent income is one of them. Another one is commission income, fee income, discount received. Okay, all your income accounts. Now, how do you highlight this? How do you identify, rather, these income accounts? You look at the credit side of your nominal section in the credit column. That would indicate to you that those are incomes. Be careful. Be extremely careful about this, please, and appeal to you. I would go down on my knees and beg you, right? Be careful. When it comes to interest income, note, it does not feature under my other operating incomes. Rather, your interest income appears at the bottom of your income statement, telling you that it is a separate item. So interest income is not operating income. Rather, it's financing income, and therefore has a special place at the bottom of your income statement. Now, although we say Learn Extra Live is important for grade 12s, definitely it is. But if you're a grade 10 learner or a grade 11 learner sitting out there, remember, you can benefit as well. Am I right, dear?
Of course.
Definitely. So a grade 10 learner sitting there, you are definitely going to be exposed to this income statement somewhere in the grade 10 year. So if you're sitting, keep your eyes and ears open, because Learn Extra Live will definitely make a difference to your accounting knowledge. Right. Now, coming back to my other incomes, obviously what I then do is I add, and this then gives me my gross operating income. Next, operating expenses. The critical part about your operating expenses, an aspect that needs to be looked at all the time, is the fact that there are adjustments that you have to take into consideration. Therefore, you would start off by taking a figure that is appearing in your trial balance. So there's your trial balance figure. Then you're either going to add or subtract. If it's a salary that hasn't been recorded, you would add the adjusted figure from your adjustment, and the total would then appear as an answer in your final money column. Now, you would notice that every question says, show calculations in brackets so that part marks may be awarded. You will see when we go into an actual question where we allocate the marks, where you can earn part marks, and therefore see the importance. It is compulsory. Accounting boffins out there, it is compulsory for you to show your calculations in brackets. It's criminal to leave it out. Okay, then obviously you're going to list all your expenses, and once again, remember, when you are dealing with depreciation, sometimes you have depreciation on equipment, sometimes you have depreciation on vehicles, sometimes you may have a new vehicle. Show the various components of your depreciation. In other words, if you're working with 3 different calculations, be a smart kid. Show them how you got to certain figures. Very often that you would see that there are part marks allocated to these calculations. So show your calculations for the different depreciations. Now, once again, on the depreciation, just to illustrate further, you get depreciation on sold, old, unsold, and new. So what do you then do? Show them as separate components, and thereby making it easier for you to earn marks. Right. Notice another important one. Provision for bad debts adjustment. Okay, now you notice that provision for bad debts adjustment says here expense. Your provision for bad debts adjustment can also be an income. Have I lost something? No, I haven't. Remember that when you are increasing your provision for bad debts, then the adjustment account is definitely an expense. But when I am decreasing my provision for bad debts, then my adjustment account is no longer an operating expense, but would then appear under operating income. So be careful when you are doing your calculation. Don't take for granted that it will always be an expense. Like you can see, when you are decreasing your provision for the year, then your adjustment account would definitely then be an income account. Okay. So once you've listed all your expenses, you've listed them individually. You now do the subtraction, and that leaves you with your operating profit or loss for the year. Your profit from operations, from buying and selling. Right. Now what do we bring in? Now we bring in our interest income. We've spoken about this already. We said that any interest that we have earned during this financial year would now appear under my interest income. Okay? Then you have your interest expense, your financing cost, right? Your interest on loans, your interest on bank overdraft. Okay? All of that would then be added into your interest expense. Right. Now, this would then give you your net profit before taxation. Okay? So you've brought in your interest income, you've brought in your interest expense, and now you have your net profit or loss before taxation. Remember, you then bring in your income tax figure into your income statement. There's your income tax figure, and voila, you then left with the final answer in your income statement, which is your net profit or loss after taxation. Okay, now what we've done in this segment of our lesson is we've dealt with the format of the income statement. Notice not a single balance sheet item appears here in my income statement. No assets, no liabilities. Okay? And yes, if you include these items in your income statement, then they are regarded as foreign items. And foreign items are subjected to a penalty. So please, guys, when you're working with the income statement, you are focused to the nominal section of my trial balance. That gives you an indication of all the items that must appear in my income statement. Yes, other items that would appear would be trading stock deficits, depreciation, provision for bad debts, adjustment, either the income or the expense, and obviously you would, as you work through the questions, you would identify other nominal accounts. So the important thing to remember is that no balance sheet item would appear in my income statement. Well, that's it for this segment of the lesson. So all that we've done is we've whet your appetite. This was a starter, an appetizer. You want the real thing? The place to be is Learn Extra Live.
Oh gosh, Ashraf, appetizer. Mindset Ashraf said it all. Mindset is Ashraf said it all. So we are going to take a break. Quick shout out to Gweze Mohlafi, Honte Sibashe, and say to thank you so much, guys, for tuning in. Let's take a very quick break, and I'll see you straight after this. Welcome back, Mindsetters, from that break. I hope you guys are still tuned in and you're listening very carefully and you're watching closely and everything is in front of you. You have your notes, you've downloaded them from our Facebook page, and Ashraf will carry on from the appetizer.
Sure, right. That was the starter, am I right?
Yes.
We're now into the main meal.
Main course.
Main course.
Yes.
Guys, time to enjoy. Right. What's the question? The question says, you are provided with information for the financial year end, 30th of June 2013, right? Important to look at the dates so you know exactly what is your financial year you're working with, right? Then, what are you expected to do? Complete the income statement. What information is given to you? You are given an extract from the trial balance on the 30th of June. There's your balance sheet account section. Right. What did I say? Look out for the big five. Does any one of them appear under my balance sheet account section? A quick glance will tell me, no, none of them are there. Meaning what? That if there were any reversals, they have been done already. Okay, so I'm just showing you method. This is how you go about answering a question in the exams. Right, looking at your nominal account section. There's my nominal account section, all the information given to me. I got the information, and then we go into the adjustments. Right, adjustment number 1. The auditors, now in this particular question, our focus is primarily on the income statement. So our concern is not the balance sheet, because the question did not say to do anything that we must do in the balance sheet. Therefore, focus only on your nominal account section and your income statement. Okay, number 1, what does it say? The auditors are owed a further 7,500. So we're talking about audit fees. Let's identify the double entry. Always ask yourself which 2 accounts are involved. In this particular case here, your 2 accounts involved are a debit to my audit fees and a credit to accrued expenses. Like I said, balance sheet, not my concern. My concern is the income statement. Therefore, what do? I go to my audit fees, step number 1. Step number 1, get the amount from your trial balance. Right, let's find it. The amount from my trial balance is, yeah, I'm sure we got it here. There it is. Right, audit fees, the amount is 88,000. So immediately, step number 1, go into my audit fees and put in the amount of 88,000. Right, so what have we done? We've taken the trial balance figure, slotted it in. Audit fees, what was my double entry? Debit audit fees with 7,500. Do you recall the adjustment? There it is. Debit audit fees with 7,500. So therefore, if I'm debiting my audit fees plus 7,500, and we've got 88,000 plus 7,500 to give me a final figure of 95,500. 95,500. Okay, so clearly you can see adjustment is done and dusted. I've adjusted the figure and I've got my final figure. Now the question arises, how is this marked in the exams? Watch. 1 mark for your audit fee. You've identified it from your trial balance. 1 mark for your adjustment. 1 mark for your final answer. So clearly you can see the importance of showing calculations in brackets. Okay, that was a nice adjustment to start off with. Let's look at the second one. Goods are sold at a markup of 60% on the cost price. The company held discounted cash sales during the year to clear excess stock. The total of the trade discount given to customers was 702,000. Right, okay, let's go into the trial balance and identify the figure that I'm looking for. There's my sales figure, and when I get to my sales figure, I'm in a panic mode. Why? Because it has a question mark. Time to panic, guys? No, don't fear. When?
Ashraf is near.
Right, look at your information. Don't panic. There must be something leading you to that sales figure. What is it? Let's look at the adjustment once again. It says here that goods are sold at a markup of 60% on cost. Right. In other words, look at your information. Can you see the cost of sales is given to you? So simple, guys. You've got the cost of sales. You've given the markup. All that you now do is calculate your selling price. And once again, our cost of sales was 8,200,000. So we say 8,200,000 times the 60% is equal to 4,920,000, add the 8,200,000. Have I got enough zeros there? 8,200,000. And this is equal to 13,120,000. Okay, so immediately I say fine. 13,120,000. Do you see? I needed to calculate my sales figure. The sales figure was not given to me. What did I have to do? I had to take the cost of sales, add the 60% to it to get my sales figure of 13,120,000. Okay, next step. What do I know about the adjustment? I'm told that the total of trade discount given to customers was 702,000. Now, obviously, I've worked my sales figure out without the discounts. Now, what do? Subtract the discount of how much? 702,000, and therefore, we say minus 702,000, and if we take our calculator and we say minus 702, 1, 2, 3, and my answer is 12,418,000. So let's put it in 12,418,000. Okay, so what have we done? We go back to our adjustment and see, have we done everything that we were supposed to do? Yes, we've calculated our selling price, and we did the necessary with the discount that was given to our customers. So if you work systematically, if you look at an adjustment, don't just go into a panic mode. Look at it, do the necessary calculation, and I'm sure you'll be A4 away. Right, next adjustment. Packing materials to the value of 41,000 was used. Now, you do recall, what do I always say? What do I stress when I work with these questions? I said R, T, F, Q. And you know what that means? I'm sure by now you guys should all be screaming out and saying, read the full question. Okay? We won't use an expletive here. We won't swear. But it's important that you read the question. Why? Because it tells you very clearly packing materials to the value of 41,000 was used. Grade 12 accounting students, they're telling you the amount that you utilized. Now, you often see this in a question where they tell you packing materials on hand amounted to a certain figure. They're telling you something different now. They're not telling you what you got left over. They're not telling you what you got on hand. They're telling you that this is what you utilized. Therefore, immediately, this becomes my expense, 41,000. Immediately, you go to your packing materials and you say, the answer is 41,000. They're giving you the amount of packing materials that has been utilized. Okay, so differentiate between two things. Are they telling me what is on hand? Then I need to do a calculation to find out what I've used. Or if they give me the amount that I used, immediately that becomes my expense for the financial year. Right, next adjustment. Interest on the bank overdraft, an amount of 2,800, is included in the bank charges. Now clearly you can see that this means that you got to do an adjustment. Why? Why can't you leave it there? Because your interest on bank overdraft is not an operating expense. We've alluded to this in our earlier segment. It is a financing expense and therefore will appear in the relevant section of my income statement. So go to your income statement where you have bank charges. Step number 1, get your bank charges amount. What is my bank charges figure? bank charges 31,000. So therefore, bank charges 31,000. My adjustment said, what did it say? Interest on bank overdraft of 2,800. Therefore, minus 2,800. You want to remove, what's my double entry? That's important. A debit to interest on overdraft, a credit to my bank charges. Look at the T accounts. Look at your calculations. You are crediting an expense, means you got to subtract from it. 31,000 minus 2,800. 31,000 minus 2,800. And the answer is 28,200. Where is my bank charges? The answer was 28,200. So therefore, 28,200 is my bank charges figure. Do not forget that interest on overdraft is what? Is an expense figure. So therefore, add the figure of 2,800 to your interest expense. You're working simultaneously. Don't forget, in this case, it affected two nominal accounts. Therefore, the adjustment in both the nominal accounts. Right, next adjustment. No entries have been made for stock that has been stolen at the beginning of June 2013. Right? So stock has been stolen. The insurance company has informed Selati Limited that they have transferred 32,000 into the business bank account in respect of the insurance claim. Selati Limited bears 20% of any stock losses. Important. Let's look at the calculation of this particular one. What do we know? We know that we've received 80% of the claim, which is equal to 32,000. Right? Let's verify those figures. What did it say here? We received, now watch, what were they saying? Why am I using the 80%? I'm saying the insurance company has informed that they have transferred 32% into the business bank account in respect of the insurance claim. Selati Limited bears 20% of any stock losses. So obviously, the insurance company paid us 80%, which amounted to 32,000. Therefore, 80% is equal to 32,000. The 20% that we're going to be losing is equal to my unknown. Solve for x. Are we in a maths lesson here? Maybe. Solve for x, guys. Simple. 80x is equal to 32,000 times 20, and therefore x is equal to that divided by 80. Let's take out our calculators and we say 32,000.
8,000 is your answer.
Right? My answer is 8,000. Thank you very much. That's correct. The answer is 8,000. If you solve for x, you're going to get a figure of 8,000 rand. Okay, now, what do we do with the 8,000 rand? We are losing. We've lost as a result of theft. So therefore, identify the account and you will see loss due to stock theft, an amount of 8,000 rand. So clearly, in this entire adjustment, we have lost out an amount of 8,000 rand. Okay, next adjustment. A physical stock take on the 30th of June 2013 reflected that stock to the value of 1,475,500 was on hand. Now, important, very important. Watch this clip, watch the space. Step number 1. Look at your trading stock figure here. Your trading stock figure is an amount of 1,534,000. So 1,534 1,534,000. Step number 1, that's the amount that we had a trading stock on hand. We lost 40,000 rand worth of stock. Why 40,000? Because remember, the insurance claim was for 32,000 plus the 8,000 that we lost. If you add it together, it is minus 40,000. Okay? And what is my stock value now? What's the value of my stock on hand? Watch, my stock on hand amounted to 1,475,500. So let's do this calculation first. Let's go back and say, fine, take my stock figure, which was 1,534,000, 1,534,000. There's something wrong there. Let's go back. 1,534,000, right? 1 million minus the 40,000. We're supposed to have stock to the value of 1,494,000. And how much stock do we actually have on hand? If we look at our stock figure, then we will see that our stock on hand amounts to 1,475,500, telling us that definitely there is something else that we have to do. But unfortunately, we're out of time for this segment. So, if you want the answer, take a quick break, freshen up, and come back to Learn Extra Live.
All right. Mindset is we are going to take a break. Before you do, congratulations to Vuyani Mofolo. You have won yourself this awesome Casio calculator. So I hope you use it for your accounting.
Excellent.
For your maths, for your geography, your maths lit, all your subjects. You need the calculator. So congratulations to you. Your calculator will be coming to you very, very soon. With that said, Mindset, let's take a very quick break and we'll see you straight after this. Mindsetters, from that break, I hope you guys are still watching and you're still enjoying the show. Ashraf.
Thank you. Guys, we've got questions. We're definitely going to answer your questions. Let's carry on with the adjustments and then we'll come back and take your questions. Right. Obviously, we were working with the trading stock deficit. And if you did your maths, you would find that there was a trading stock deficit of 18,500. Okay? Now, obviously, this meant that you had to complete that calculation by taking your trading stock from your balance sheet account section, minusing the 40,000, minusing the stock on hand as per our physical stock count, and the difference would have given you a figure of 18,500 as your trading stock deficit. Right. An amount of 1,700 Rand received from M. Mpwani has been credited to the debtors control account in June 2013. The account was written off as a bad debt during May 2013. Now definitely, if an account is written off as irrecoverable, it means that we are not going to recover that money. However, if subsequently that debtor pays you, it has absolutely nothing to do with debtors control. The error has been made to the fact that it was entered and credited to the debtors control account. So you have to correct the error. Obviously, you got to debit your debtors control account and credit an account called bad debts recovered. Okay? And the amount was 1,700. Right? Okay. So, in your income statement, bad debts recovered is an income, how much? 1,700. Okay, so as we're going along, we're completing all the transactions, filling in information. In this case here, because we're limited to the income statement, it's quite simple, and we're going along with our adjustments. Right, next adjustment. The provision for bad debts must be adjusted to 4% of outstanding debtors. Right. Interesting question. Now, firstly, take your debtors control figure, right? Your debtors control figure is 521,300, okay? But we did something to that account, didn't we? Remember there was an error, and what did we do? We had to then debit the debtors control and credit our bad debts recovered. Therefore, the 521,300, we have to debit it. We got to add an amount of 1,700 Rand to it. So, 521,300, 521,300. That was a figure that appears in my balance sheet account section. Add an amount of 1,700 to it, because remember, we corrected that error that we had made by debiting the debtors control and crediting provision for bad debts recovered. And this is equal to 523,000. Now, times this by 4%, and you get a figure of 20,920. Let's just do that again. We got a figure of, let's go back to our calculator. Let's check our figure. Our figure was 521,300, 521,300, plus we added 1,700 to it to give me a figure of 523,000 times 4, and my answer is 20,920. Okay, now keep that in mind. 20,920. Okay. Let's look at my existing provision. What is my provision for bad debts? 22,000. Now, this is something that you must understand. 22,000 is my existing provision. I need a new provision of 20,920. So therefore, 20,920. Ask yourself this question here. What must happen to my provision? What must happen to my provision? I have existing 22,000. I need my new provisions to be 20,920. Clearly you can see that your provision needs to decrease. And when your provision decreases, it means that it is no longer, or rather, it is treated as an income. Why? Because my contra entry is a debit to provision for bad debts. There's my contra entry, a debit to provision for bad debts, and a credit to my adjustment account. If you're crediting your adjustment account, it now becomes an income. So, 22,000 minus 2920 minus 22,000, and the figure is 1080. Right, and 1080 would now be my provision for bad debts adjustment, 1080. Notice that your adjustment account is appearing under your incomes. And the reason for that is because we have decreased our provision. Right, next adjustment. One employee has been omitted from the salaries journal for June 2013. His salary details were as follows. What? There's your deductions, there's your employer contributions, there's your net salary. Now remember, the salaries amount is 4980 is your net salary. That's what you owe your employee. What was the total deductions that you had? 2020. So let's take that. 4980 plus my 2020, and that gives me a figure of 7,000. What is the 7,000? The 7,000 is your gross salary. You debit salaries with 7,000. You credit creditors for salaries with 4980, and you credit all your liabilities with 2020. So 7,000 is my expense amount. Therefore, notice in my income statement, let me first find my salaries figure. There's my salaries. Let's find our salaries. Step number 1, get the amount that appears in my trial balance. The amount for salaries is 788,000. So therefore, 788,000 salaries and wages, 788,000. Remember, one of you asked the question, what does TB stand for? Trial balance figure. Got it?
Yes.
We're answering the question, right? You asked the question, what does TB stands for? It's a trial balance figure plus the ADJ, I think you asked?
Yes.
It is your adjustment figure. How much was my adjustment figure? An amount of 7,000 Rand. Okay, so clearly you can see trial balance plus my salaries and wages adjustment figure. So 788 plus 7,000. Can I have an answer, please, ma'am?
7.
88,000 plus 7,000.
1, 2, 3 plus 7.
Is it 795,000?
Yes.
Am I right?
Yes.
Okay, thank you.
So clever.
795,000, and that's the figure, my final figure for salaries and wages. Okay, now I had also you've also seen in the adjustment that they mentioned something else here. Employers' contributions. That means we as the employers have also contributed on behalf of our employees. Therefore, an amount of 1610. Let's find the amount first in our trial balance. Employer contributions 81,000. Therefore, once again, employer contributions 81,000. Remember, trial balance figure plus what was my adjustment figure? The adjustment figure was 1610. Therefore, add the 1610, and obviously I'm not going to go look for an answer because surely you can do that. Let's look at the final adjustment and see if we can complete it in time. Very simple, guys. Whenever you're working with a loan, there's your opening balance, there's your repayments during the year, there's your closing balance. You want to now determine what was your interest. Right, watch this space closely. You say 750,000, which is your closing balance. So add to it the 840,000. Let's do that. 750,123 plus my closing balance was 840,000. 840,123 is equal to that minus your opening balance 1,470,000. 1,470,123, and your answer is 120,000. Notice, what have I done with my loan account? I've put in all the information, and the interest amount, the missing figure, amounts to 120,000. Shoo, I wish I had another hour. But unfortunately,
Yeah, time.
we've come
It's
to the
gone.
end of our show. Guys, appeal to you guys, make sure you engage your past papers, right? Engage your past papers, make sure you know exactly how to go about doing these questions, and I promise you, you do that, you're going to be a shining star. Ashraf's shining star.
Oh, thank you so much, Ashraf, for the lesson.
Oh, no pleasure.
Mindsetters, Ashraf said it all. Thank you for tuning in. All the best for your exams. Until next time from us, goodbye.
Bye-bye.